So stock markets this week have enjoyed a relatively robust week, and that's despite really two key themes that I would pull out and comment on. The first is inflation and increasing signs of inflation that's coming through around the world, and secondly the troubles in the Middle East and what impact that is beginning to have on the oil price. So I think that the equity markets are proving to be rather robust despite those sort of two rather negative features that are impacting on sentiment at the moment. If we just take a look at the FTSE at the moment, you can see that we've reclaimed the 6,000 level. The wobble that was seen just earlier in the week was largely driven about events that are taking place in Libya at the moment, and we were hearing during the course of the week of various attacks that were hitting some of the oil refineries. And you can see here, just noticeably on the chart, as what impact oil is having, or this is having on the oil price. A lot of comment at the moment as to how far the oil price will impact on economic growth. Alan Greenspan himself, the former Fed chairman, is actually commentating regarding this, saying that it's a very precise measure as to the higher the oil price goes and what impact that does have on economic growth. But for the time being, it doesn't appear to be weighing too much on equity sentiment. And I would also add that we had comments this week from the ECB and the chairman there, Trichet, who was referring to interest rates. He rather stunned markets, suggesting that interest rates may go up in the European region in April. Some investment banks are now saying that's a near certainty we'll see them going up. Maybe he's just playing a little bit of a sort of sharp shock treatment to rates, but they clearly are looking at price stability. And this whole area of inflation, I think, can be seen quite clearly in this next chart. This chart is relatively obscure. It's the chart of cotton, but it just really gives an impression of, since this chart really extends for about a year, as to how far the cotton price has moved and really started to hit towards all-time highs. Now, cotton obviously is a very big input cost to clothing, and I thought I'd just really show the impact that it's beginning to have on the retail sector. The retail sector here, let's just pull out Marks and Spencer's, but I could have put out anything here. But over the course of the last 4 or 5 months now, shares in Marks and Spencer's have come off from a high of around 420, 425, and we can see it now back down to the lows. So a big relative underperformance seen in the retail sector at the moment. That's despite, of course, we've seen a new guy going in there. So we're waiting to hear the new strategy. But I think if you picked up next another big, good quality retailers at the moment, they've all been markedly underperforming. So maybe an opportunity there to look at some of these if they come off a little bit further. Some of the very weak retail players at the moment, I'm talking about companies like Black's Leisure, JJB, we've also had HMV, and it's quite noticeable that they said they are going to be breaching loans. So there are a lot of turmoil still to come in the retail sector. So I think stay with the quality, and it might be the opportunity there to pick some Marks and Spencers up into this weakness. One stock that we would highlight this week, or at least one sector we would highlight as being a key feature, has been the dramatic re-rating of the outsourcing sector. I've picked up a chart here of Capita, but I would also highlight that we have a buy note out this week on Circa. Despite the re-rating, we think there's a lot further to go. The comments this week from Capita Chief Executive Paul Pinder, the announcement of the results, suggested that the government is getting quite serious about outsourcing. I think there's ample opportunity for these companies to pick up some fairly meaningful work out of that sector. And you can see that a combination of good results, well-received pipeline of new business, and comments from, as I say, Paul Pinder there, suggesting there's a lot to come, is making this sector all of a sudden quite exciting again. So despite the rise, we'd love to see a pullback because we still remain buyers, and we have a buy note out on Serco this week.